Hey guys, so today I just want to have a short conversation about how I pick my stocks for earnings and how I know whether or not a stock is going to be going up or down in the near future. And as you can see here, I actually made $92 in a day today, but in the last week, I was actually up to 333. You can see it right here. And this is actually was higher, but it just shows you what it was at the close of the day. But I wasn't able to sell because I don't want to take a day trade on Robinhood. However, I was doing it holding this Disney stock. And essentially, what I did was I waited for earnings for Disney, and I knew that a lot of people were going to be bearish because Disney is a company that relies heavily on its parks and on services like ESPN. A lot of people don't know that they actually own ESPN Sports and a lot of news networks like that. So when I saw them post their earnings and their earnings hit below, I believe, if we check right here, yeah, you can see that they hit much below what they should have and almost 20 cents below. And essentially, what this meant for the company was that they weren't doing too well. However, this is to be expected with a company like Disney because most of their industry is affected by the coronavirus. You can tell that parks haven't been able to open, media networks, as it says down here, other products that they have are probably not selling well. They haven't been able to put out movies and other things like that. For example, if you remember the Frozen movie, a lot of products, they sold billions of dollars of products just from the Frozen movie, and so they haven't been able to make these type of earnings in the near like in the past few weeks, in the past few months, because of the coronavirus. But if you look here, they actually ran over $4 today, and yesterday they were all the way up to 105, and when they did go up to 105, I was able to sell these contracts out. So let me just show you here my history. And it was actually kind of hard to sell them at the price I wanted because I want to make the most amount of money I can, and Robinhood isn't really the first broker. But as you can see here, I was able to buy some at $48 the first time I bought them. And then they went down a little bit more, all the way to like when the stock was at 97, $98. And I just knew that Disney could not be worth this amount of money. Like even before the coronavirus, or I mean after the crash, they were worth $99. So how is it possible that after an earnings run, they can be worth less than after the coronavirus crash? It's just not possible. Like it didn't make sense numerically. So I knew that they had to be having a rebound in the next week or so. So I bought these contracts for about 2 weeks of time. And after they went down, I bought this at the lowest price that it went to, $36. So that's something I really like to do. I like to buy in on the dip and make sure I'm able to make a return. And then if it keeps dipping down, I buy again. And then that way I can cover my losses and make money on the way back up. And as you can see here, I sold both those contracts today for around $95 or $94 if you average both of them. And this brought me a really big earning. As you can see on my 1 day graph, I was able to earn over $90 in a day. And what I really recommend to people is if you know an option is going to go up, a lot of people only buy one. However, I would buy two. That way you can make double your profit. Like this sounds obvious, but a lot of people don't really realize this. They don't realize that if they think something is too cheap, and instead of buying one $10 contract, you might as well buy two. At the end of the day, your max loss is the money you spent on the contract. So yeah, that's what I want to say to people. And essentially earnings runs, if you know a company is too cheap after earnings because it posted a bad earnings and it dropped a little, just buy into the company and hold those stocks for as long as you think it's going to go back up, and you should be bound to make money. Like as you can see here, Disney tested the $90 level a lot of times, 100, 100, and then 100 again when I purchased in, and now they're at 105, and I was able to make over a $60 return, and well, $90 in a day, as you can see from there. So yeah, it's a really good strategy to do. And I would recommend you guys to keep an eye out for stocks that you think are too cheap at the moment and simply buy options instead of buying into the stock. I could have only made $5 if I would have bought into the stock. However, with the options, I was able to make over 90. So yeah, that's why I really recommend options trading and why I think it's more powerful than stock trading in the short run. If you're going to hold for the long run, well, then maybe it's more positive to hold than to hold stocks, because as you can see, Disney was worth around $150 before the crash, and then at that point you can make $50 on each share that you have. But also it's a higher capital investment. As you can see, I only spent $40 on those contracts, whereas if I wanted to bid on the stock, I'd have to spend 100. So yeah, you just have to really think about what's your benefit, what's the cost, and how much can you win or lose in the short run, long run. So yeah, so good luck guys, and keep an eye out for these really cheap stocks after earnings because there's going to be a lot of them. Thank you and good luck.